Well, hello there, everybody. It's Adam here again, coming at you from Voice of Crypto. How are all of you? How's your day going? Make sure to grab some water. That's always a good daily reminder. Now, what's the topic we're talking about today? I think you might be asking yourself. Well, today, we're on the topic of Ponzi schemes and crypto. We'll be talking about examples, we'll be talking about cases, we'll be talking about how to avoid them, what they are, and what to look out for. You know? So, before we begin about going into a deep dive of this topic, I first want to give a definition of what a Ponzi scheme is. And quite interestingly, Ponzi schemes are quite similar to pyramid schemes, MLMs. They're essentially around the same definition. Essentially, they're like they're all frauds. They're all investing scams which promise higher rates of return with little risk to investors. It works by generating returns for early investors with money taken from later investors. When it dries up from new investors, the proverbial cloak is unraveled, and boom, you're in too deep and in a Ponzi scheme. Now to crypto, in the context of crypto, I mean, this is how they work. In a crypto Ponzi scam, the con artists create fictitious crypto businesses and entice investors, that being you and me, with varied claims and false figures. They're going to give you false data, they're going to give you false graphs, and it's a little simpler to promote false earnings on crypto because some audiences just don't fully comprehend how it works. And they're intrigued by the possibility of these digital assets because they probably don't know what else to expect, right? They're just promising attractive returns on an investment no matter what, no matter the case. And this can also be tied back to how crypto in of itself, people always used to think that type of stuff was always like a Ponzi scheme or like a sham or something like that. And that's people probably deluding themselves, going oh, people are telling this is a sham, this is something else. No, 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 I'm gonna invest this. I feel a connection with this, right? Anyways, I'm going off topic. Let's get into the examples that I want to talk about. So, first example right up is OneCoin. That is possibly the longest running Ponzi fraud in the cryptocurrency sector because between 2014 to 2019, OneCoin, which was founded by a Bulgarian scammer named Ruja Ignatova, also known as the Crypto Queen, by the way, was able to attract a large number of investors. During this time, the Ponzi scam is believed to have conned investors of around $5.8 billion by promoting OneCoin as a Bitcoin killer and the next hottest crypto invention. It was a multi-level marketing stunt, and I mentioned what a multi-level marketing was. And eventually, the US government, they cracked down on this. They cracked down on the company's operations, they leveled charges, they went full on, full force SWAT team kind of busting down the doors. But however, by this time, Ignatova herself, she vanished completely into thin air. While a few of if I'm not mistaken, in the business had gotten caught, Ignatova completely vanished like a ghost. And now let's go into the next example. Gain Bitcoin, which was launched in 2016 as an India-based cloud mining solution that claimed monthly returns of 10% for 18 months. And as absurd as it may sound, the project secured $300 million in funding from Indian investors. In 2017, it became evident that the extensive design lacked both physical mining equipment and mining activities. Amit Bhardwaj, the scheme's mastermind, was arrested and charged with defrauding over 8,000 investors in 2018. However, all signs are that the lawsuit has faded out, and the investors, well, they're unlikely to regain their losses. It's kind of disappeared. And there's really been no sign of it. Now, another scam that I'm going to draw everyone's eye to is BitConnect. It debuted in 2016 as a Bitcoin lending solution that promised 40% monthly returns. The operators were a group of mysterious developers led by Satoru Nakamoto, clearly a fake identity, And investors had to buy BCC tokens, lock them on the platform, and wait for trading bots to trade with their cash. The unsustainable returns on investment promised by BitConnect were initially criticized by Ethereum co-founder Vitalik Buterin, followed by Mike Novogratz and Charlie Lee. It wasn't long before British authorities became aware of the situation. BitConnect was eventually labeled a Ponzi fraud by US regulators, who asked that it cease operations in 2018. Following that, the price of BCC plummeted by 90%, resulting in a $3.5 billion loss for investors. And there's so many more stories like this. There's just so many more cases where it just kind of is almost heartbreaking for investors. It kind of gets a little bit more sad as you get into it, and the more who invest into Ponzi schemes, well, there's very little chance of that money coming back to you, you know? So, in the spirit of that, let's just take a look at red flags to look out for. One is the assurance of big rewards with minimal risks. Two is a steady stream of profits regardless of market conditions. Three, secret investment methods or those deemed as too complicated to explain. Four, clients denied access to like formal investment documents. Like they don't reveal to you like how anything works. They don't give you an inclination of a clue. And five, clients that are having trouble withdrawing their funds. These are like five things that could help you figure out. There are red flags about this because like you just remember those five things and maybe that can help you decide where you should invest your money. And I think the takeaway from this is, well, it's evident that scammers take advantage of investors' lack of crypto knowledge, but they can even trouble those with significant crypto knowledge. It's the fascination of crypto as a new technology. We're all just so curious about it, and it's a beautiful, wonderful space that we as a community are truly gathering around. And it's wild. The message is that you should always conduct your research. You should always look into something, and no matter how good it is, you have to question. Don't trust anything by its first look. Just like look into it. Be a pessimist if you gotta, but like you gotta be on the safe side because this is your money at the end of the day, and you don't want to waste it around like this, right? So remember those 5 points I talked about earlier. And the easiest method to spot red flags and avoid falling prey to sadly numerous investment scams out there is, as I mentioned before, proceed with caution and do some fact checking. Look into the company background, look into anything you can find, look at forums and see what people have to say. So with that, I leave you guys. It's Adam here from Voice of Crypto, signing off.